Welcome to EntrePods, the most cutting-edge podcast for entrepreneurs and investors. We answer the hottest question today. So now what? We are radically civilized with a focus on durable solutions that make the most positive impacts in your business, financial, personal, and community life. The world right now belongs to entrepreneurs. Today, we'll show you through our expert conversations that matter, the limitless opportunities you have right now to live the life of your dreams. The best version of you and your business starts now. Welcome to EntrePods.
Hi, everyone. Welcome to EntrePods. Thank you so much for being here with us today. Today, I've got Jennifer Gligorich, our wonderful host, online with us. I am Tammy Gearling, the podcast manager, and we do have an awesome guest. He's got so many wonderful things to talk about with us today. So I'm going to go ahead and hand it over to Jennifer so we could get started. Hey, Jennifer. Good morning.
Hey, good morning. Yeah, it's an earlier show for us, which is really good because then my makeup, I feel like it looks like fresh today. But y'all can leave it in the comments. So today we have someone absolutely awesome. And I met him off of LinkedIn and we had an incredible conversation. And he is the founder and co-managing partner of JID Investments. And they're a real estate, private money, and equity investment firm. So for anyone who's looking to get into real estate, he also works with veterans as well. This episode, we're going to talk a lot about things, pros and cons for people looking to get in, and it's whether or not you're an accredited investor or just getting in. So we're going to run the gamut with it. So just to tell you a little bit about his investment firm, they've managed about $28.2 million for the company, and they currently have about $20.9 million invested. And John's a graduate. I hate to say their name ahead of time, but okay. Well, I won't tell you his end name, but he's a graduate of New York Maritime College. He's got his third mate's license in the U.S. Merchant Marine, and he was a naval aviator, which I think is just like super cool, for 20 years. And he's got a bunch of kids. So he just is like very busy person. So anyway, I want us all to welcome John Rubino to the show. So
Thank
welcome,
you.
John.
Wow, it's a pleasure and honor, and I'm so happy to be here. Thank you for having me.
Yeah, I'm excited. I hate that I dropped your name. I wanted to do it very professional, like Jimmy Fallon, how you're supposed to do it. But anyway, so I love the fact that you work with transitioning military members and trying to get people getting into real estate investing. I'm a huge advocate, of course, obviously, of real estate and investing in real estate. And I feel like for Americans, we are the tax haven for the rest of the world, right? And then usually Americans have to go somewhere else to invest our money. So everybody else comes here and they buy land, but we can do that too. There are many things in place for us to be able to take advantage of that, and it saves our environment and it helps stop homelessness. I mean, ethical entrepreneurship, and in particular, ethical real estate investors, it really where it's at if you have a heart for helping humans and helping our planet. So let's talk a little bit about the real estate folks who like to invest, are looking to invest, and they want to understand the pros and cons of active versus passive investing. So I'm just going to let you take that away since this is your bag here.
Yeah, that's a great question. I was in the Navy for 20 years, like you said. I invested actively for a bit, about halfway through my time. And I was involved with some new home builders, new construction projects. And, I took on the responsibility of working with the builder and oversee the operations and management to make sure everything was on time. And I was coordinating with the banks to potentially take ownership and start paying on a loan. So these were all the things that I had to do actively, and then ensure that, I met all the stipulations of the county and all the regulations. So it was very intense and very involved. And for someone that had a full-time job in the military, let alone, it took up a lot of my time. So not that I didn't enjoy it. It was right around the corner from where I lived. So it was fairly close, which was great. But I learned a ton. And I decided that, I really wanted to get into more on the passive side as I continued my career towards the 20-year point in the Navy. So I got involved with some friends that decided to stay active, who got out of the Navy, that we were kind of partnered together as far as being stationed together. and they went on and built their businesses. They started development companies. They started small and then they grew. And I basically provided them at the time seed capital or private money or equity out of the money I made from some of my active projects. And I basically let them run the show with my capital, but I was getting updates on the projects. I was getting the information. I was getting all of the, what we call pro formas or underwriting, which is all of the cost breakdown, how the profits were going to be earned. And they were walking me through the process from start to finish. But I wasn't involved in the day-to-day operations. I wasn't involved in bank debt or recourse responsibility as far as being a guarantor on larger sums of money, being personally guaranteeing those. So I didn't have to deal with the liability of the active side. And at the same time, I could go to my day-to-day job, my normal job in the military, but also be able to come home, check out my portfolio of projects with these folks that were actually actively managing them, and still have the opportunity to invest in real estate, which was exciting. So that to me was very, very advantageous given where I was in my life and my career with my family and being able to still be involved in real estate.
Yeah. And so John just talked about a lot of stuff. So I want to unpack a little bit of it, because if you're looking at passive real estate, there are many things that he just discussed that you're going to want to pay attention to. There are questions that you're going to want to ask whoever you want to invest with, if you can get that. So let's talk a little bit about some of the things that you talked about. So you're giving people money and you're trusting that they're going to build, to run their business, and you'll be able to get a return on your investment for it, right? And that sounds great. Like the worry's out, they're going to take care of everything, but yet there are things that they are supposed to provide you and questions that you're supposed to ask. So let's talk about this from an investors. And I've talked to, I've done meetups and I've talked to people who've been veteran investors, accredited investors, and they sometimes forget to ask for certain things, and then it doesn't go well, right? Or they get pushback. Oh, we don't do this and this and this. So what are some of the things you absolutely need to get so you can feel comfortable, and then some red flags?
Yeah. So, I mean, first and foremost, you always want to make sure you have a good understanding of what you're getting involved in, especially if you're going to start putting money into something. You want to make sure you have a good basic understanding of the term syndication or passive real estate investment. You want to make sure you understand what those terms are. You need to understand what your role is and how you're going to be participating, just big picture. And there's a lot of resources out there. There's books, there's websites, the internet it's got so much good information.
Yeah, but you're here right now.
Yeah. So you want to, but that's the first thing, you say, hey, I want to invest passively. That's great. How do you do that? How do you learn about it? So yeah, you want to get involved with people that have done it before. You want to get yourself up to speed on what it all entails, both from the investment standpoint, the legality standpoint, how do you protect yourself standpoint, how do I make sure that the folks I'm working with, whether it's directly investing with the sponsor who's the active piece, is the right fit for me, or a company like John who works with the sponsor and represents the investment from where I'm coming in as an investor, that part of it. You have to make sure you're very familiar with that information. And that's taken me 15 years to get down. And it's not something that happens overnight, and I'm still learning. So you have to build an understanding. I would say that, partner up or get to meet people that have done it. Like you had mentioned, you go to real estate investment groups and talk to them, have a conversation, say, how do I get involved in this? How do I start this? What's the best way to go about doing this? Obviously, you mentioned the term accredited investor, and that's important because a lot of these investments on the passive side are only open to accredited investors. So you have to understand, okay, how do I get to that point? How do I meet the criteria through the Securities and Exchange Commission compliance and regulations? If I'm not accredited, can I still invest? And what's the mechanism for me to invest passively? So these are the different questions. I would sit down if I was someone starting out and just putting these questions down and just asking myself these questions. And then when they get to the point where they get some answers, whether it's through them or through people they're meeting, mentors, going online, reading good books like Rich Dad, Poor Dad, and looking at folks like, Grant Cardone, who's been doing it forever. These are all the big names in the business. And I'm available anytime, which, I can help folks and talk to folks because I love to share. But that's where you start building your experience. And the biggest thing is not necessarily what am I going to make or earn or get my returns on as far as my money, but how is my money most protected? That's the biggest question, is that everybody can offer you the moon and the stars, but if they can't tell you how you're going to get back your money, and not only the main way of getting back your money, but other ways, which we call multiple exit strategies, then that's definitely a red flag. The biggest thing, and just real quick, the biggest thing I look at whenever I'm getting involved with a new business that I want to invest with is their experience, what they say they do, their performance, their track record, that they've done well in the ups and in the downs. And that's very important to me, because if they're not a proficient sponsor or operator, that's a big challenge. That's a big issue. The next is the location. Where are they investing? Are they investing in California? For me, is a no-go, or are they investing in Atlanta, Georgia, which for me is awesome. Okay, so that's the second thing.
Atlanta is hot.
It is very hot.
Atlanta is still hot. Yeah, it is.
And then just lastly, and then I'll be quiet for a sec, is I'm looking at the intangibles, the returns, the risk, the asset class, the demographics, what's going on with the population, which businesses are coming in, is it growing, is it declining? So those are just the tip of the iceberg things I look at before I really get into the big details.
Yeah. So and don't get overwhelmed by all this. You're learning a brand new career and it's open to everyone. And just like if you were just going to go to anything, you have to learn. I mean, you can't just walk into a McDonald's and just start doing things. You have to learn their process, how they do things, their timers, their machines, everything is a process. So don't get overwhelmed if you don't get it. The good thing is there's a tremendous support network with real estate investors. Now, there are people that you're going to want to, protect yourself and ask, but if you hear what John says, ask the questions, get multiple responses, use your common sense and your own gut reaction for things like, this sounds great, this doesn't. It's a career. It's not a get rich quick scheme. Right. So
Absolutely.
any times you go to events or things like that, and it seems to be that's the flavor, you're going to become a millionaire overnight. And they start saying these, kind of cliche, things. You need to push back a little bit and go, because it really isn't like that. It's an entire career in investing. You're not going to get a return on your investment, sometimes 5 to 7 years. You're just going to be watching it and hoping that money grows in a better way for you, making more money than just having it sit there on your couch, which is basically a savings account, getting 0.5% maybe, or whatever that you're getting. It's just a smarter way to invest in your money. And I love the fact that you just brought up, John, about multiple exit strategies. That is an important question for an investor to be able to ask any syndication or who you want to partner with. So what's the exit strategy? So what if that doesn't work? Just this week, I talked to someone who's pretty well known. They've been a coach for, they managed $285 million worth of real estate, had 7,400 doors, and they ended up going to federal prison in 2008 for 10 years. Regular middle-class guy. That money was not translating some jet-setting lifestyle because it was all locked up. And then he started taking money from profitable companies and moving them to the non-profitable ones so investors would be able to get it, but you're not supposed to do that without disclosure. So he ended up getting in trouble for mail fraud or mail securities, 10 years, which was a max sentence for that. And his name is on websites and things like that. And he's had to fight because people were reporting as a Ponzi scheme. It was not actually a Ponzi scheme. And he's written many books now. And he ended up going to prison and getting a degree in theology and one in ethics. And now he talks about it and how that happened. And so exit strategy is one of the things he didn't have. He did not have it with his partners. He didn't think about that. And when things went south, well, then they started scrambling and they kept on thinking, well, once the money comes back in, this is just a dip, right? Well, sometimes it isn't just a dip, guys. So be sure to ask them these important questions and don't shy away from it. And if they get offended, that's not the person you want to work with.
Yeah, those are all great points, Jennifer, that you hit. I agree. You have to be able to ask the tough questions, and they have to be able to answer those tough questions and not get, upset or get offended. And so when I invested passively for about a 7-year period, I enjoyed it. I learned a lot, and that's why I really stood up my business, JID Investments, because I figured, hey, I enjoyed doing this. I made good money. Why not, bring this to friends and family to start, people I work with in the military. And then we started growing from there. We have about 160 investors on board right now. And those are all people that started with us or have been with us or have found us now, not only publicly, but organically by going out and talking to people. And what we try to do is really make that process easier for folks. We bring those deals from partnered sponsors that we've grown a relationship with through due diligence, through sitting across the table from them, getting to know them, going to their properties, visiting with them, really getting comfortable with them, making sure they understand what we do, the value we bring to them, making sure they're a good fit for us, because we're going to bring them to our investors. And I'm an investor too. So my partner and I are both investors. So we want to make sure that, hey, if it's not going to work for you and I as an investor, then why are we going to bring them to our company? Why are we going to bring them to our investors? So we spend a lot of time with that on the front end to make sure they're a good fit.
Yeah, one of the things I love
important.
that you do is John has a limited geographic scope. He only invests in projects that he can visit and he can be near, and that he knows the people. So we talked about that, because you hear about people who are just expanding to places and they've never set foot in that town, not until after they acquire the property. And that's not a good thing to do. So talk about the areas that you're in right now, and we talked about Hotlanta, but what are some other areas and projects you have that are kind of hot for investors who like to keep their ear?
Yeah, great question. It's number 2 on my list when I do that tip of the iceberg I mentioned, but it's very close to number 1, which is the sponsor. I live in Northern Virginia, so obviously Washington, D.C., Maryland, and Virginia. We're kind of in a trifecta area here in our location. And with D.C., we have the federal government. We have Amazon headquarters 2 here now. There's a lot of jobs, and obviously it's the capital of the country. So it's growing. It's only getting bigger. We have major sporting teams that are here. And so DC is very well absorbed, and it's not recession proof, but I would say it's pretty recession resilient. And we're seeing that now. So we have 3 marquee projects here in Washington, DC. 2 of which are multifamily mixed use condo product, all 3 actually are in opportunity zones. So again, you went back to your question about exit strategies. That just opens the door for so many, not only exits, but opportunities to stay in. If folks want to stay in on a project that's, finishing and stabilizing for us to exit, well, you could stay in if you want. And here's the benefits of that. We also love the Southeast. We don't go further west, I would say, than Tennessee. So we're in the Carolinas, we're in Georgia, Florida, West Virginia, anything kind of west up to Tennessee. So we love the Southeast. We love DC, Maryland, and Virginia. And if you look at the demographics and you look at the track record and you look at the ability of those markets to rebound from COVID and how well they're doing, that's why we're there. We were there.
Well, Tammy's in Orlando, and it is.
Orlando's booming. Yeah. Tampa's booming. Sarasota's booming. It's just they're great markets. They're conducive to business. They're great for quality of life and cost of living. And listen, I'm not going to get into a political discussion here, but at the same time, they're very much conservatively based areas that are business advantages. A lot of companies are moving to Atlanta. You're seeing them, Amazon, Microsoft. It's crazy.
Yeah. I was just on this one thing of places to retire, because I live in a very touristy area, and my son is going to be a sophomore, and this area, I kind of grew up here, but then I left for a very long time and I lived in other countries. And I even told my son, I was like, yeah, once you're 18, you're out, just keep the pressure on him. and then, I'll probably move. So I'm like starting to think of areas, and I was absolutely amazed. There is a website you can go to, like, where should I retire in the US, right? And you put in everything: politics, the types of people, the types of religion, the types of, everything. There's like 30 different indicators, and you can put like, this is really what I want and need. And I was amazed because, number one, I've got to be near the water, but I was still amazed at how many places in Tennessee came up for low cost of living, low cost of house, but yet a relatively good, work-life balance with more people employed than not, these hidden little gem counties in the middle of nowhere. And I was like, I never would have thought about that. But I've talked to other real estate people that said, yeah, there's some interesting movement right now, especially with the ability for people to work remotely. And for our environment, and for, cleaning up cities and being able to tear down and create green zones in cities. And that's takes us to something you brought up that I think we still have time to talk about, which is opportunity zones.
Yeah, opportunity zones are really interesting. Obviously, there's talk now. You and I think we spoke about this when we first met, about the potential of the administration here now looking at getting rid of some tax sheltering type programs like 1031s, Delaware statutory DSTs. But the opportunity zone looks like it's gonna hold up. And it's an amazing investment, because you're getting benefits from capital gains that you get back, which typically could be taxed as either short term or long term. And there's discussions about that too now, where corporate for capital gains that could be seeing major increases. But with opportunity zones, you get to defer those gains on a liquidation for up to 5 years. And you could use that buying power with that investment on the capital gain to be brought into that type of investment and have the full power of that investment dollar for 5 years without being taxed. So that's one huge benefit. The second benefit is current legislation allows you to reduce 10% off that tax in year 5. So you bring in $100,000 on an opportunity zone, you're paying taxes on $90,000 in the year 5 when it's up for deferral. If you have to stay in the investment for a minimum of 10 years, but whatever you earn on that investment is tax-free after 10 years. So let's say you bring in the 100, you make 100 after 10 years, the 100 you earn on the 100 you bring in is tax-free. So at the $200,000 in that example you earn, you're paying taxes on $90,000 in year 5 of the deferment, which is amazing. There's one last a big positive is with depreciation. As you know, depreciation write-offs, you can claim losses on property. And as a partner in these projects, even passively, we get to write off depreciation if it's applicable for the partnership. With opportunity zones, well, typically what happens at the end of a project, when you sell or you refinance out or you get rid of the project, you have to pay recapture, which is typically a gain that's realized off the depreciation loss. With opportunity zones, you don't have to pay recapture. So you get all the depreciation loss and you don't have to recapture as long as you stay in the investment for 10 years or more.
That is
amazing. It's amazing.
Yeah, that really is amazing, because that is an alternate investment strategy for people who are now, like all the millennials that are coming up. Just think about that 10 years, what you can do for that, and be able to put your money into something that is going to have that many tax benefits. You just cannot discount that. So yeah.
My youngest is going to be using that for his college tuition in 10 years, because we're actually investing in opportunity zone deal right now in DC, which is a great project. And yeah, you're exactly right. I mean, that's, if you could put that money and just say, hey, I'm going to leave it in there for 10 years, the market's going to go like this, but at the end of the time, I'm projected to make, 100% return on my money. If that's the projection for that project, you put in 100 or 50, you're getting 50 or 100 back, and it's tax free. That's amazing. There are some states that don't recognize the gain as being tax free. California, Kentucky, believe it or not, North Carolina, and I believe Massachusetts are 4 states. I believe New York might be becoming a state. Check with your accounting professionals and do some research, but those 5 states, I believe, will require you to pay state capital gains. But outside of that, no federal capital gains. And for the states outside of that, it's tax free, which is wonderful.
Yeah, no, that's absolutely wonderful. And so I know a lot of people are like, man, I would just do anything for that money or whatever. If you're working full time and you're still going to be using that and you want to be able to put something away to have a little bit of money to invest, you can't think of a better way to move your money and have it really work for you. I forget who was it, Chris Noggle. He's the one who says this. He goes, don't have your money just sitting on the couch eating Cheetos watching your Netflix. Have it work for you. And you need to think about ways to have it work for you. You know, it's your money.
Yeah.
So you talked about your kid going off to college. So you have a bunch of kids, right? Are they interested in investing in real estate investing?
Yeah, I have 4 kids. I have a daughter and I have 3 boys. My daughter's the oldest, so she's in charge, and she's the toughest of them all, which is good. But she's always my baby. So my oldest son is a freshman in high school, and I've gotten him hooked. We've been playing Robert Kiyosaki's Cash Flow 101. We play Monopoly.
My son loves to play that game with me, and I always make the wrong choice. I'm like this, and he's like, "Oh, mom."
He always wins. He always wins. I say, this game's rigged. You're looking at the cards before we play. But no, he really enjoys it. He's actually mowing lawns now, and he's making money, and he has a bank account. He's getting excited about, hey, I want to invest in stocks. He mentions cryptocurrency, and I say, get out, because I don't like that. But yeah, I'm encouraging that, because there's opportunity out there, and kids need to learn that at a young age.
They do. Kids are curious about it and learn about it now. I know that we've talked to someone who wrote a book. They're an accountant on stocks, and they did just, regular index stocks and taught their kids, and they gave their kids like fake money.
Yeah.
And then they started giving them, the kids started saying, we want to use our real money. And they started making money in the stock market by just being smart. And the book is written for it's like the idiot's guide for kids,
I need a copy.
Yeah. Okay. I'll shoot you over the information when we're done.
You're right. You're right.
Okay. So guys, we've been talking with John Rubino. If you want to get more information from John, you just go to jidinvestments.com and you can learn a lot more about, what's hot right now, investing. Yeah. If you're an investor, if you're looking to get into that area, especially the Southeast, where John is an expert on what's hot and going on, have a conversation. It's even if you're not ready, but you're going to be ready, it's still a good conversation. And these are the types of people that we all need to be talking to up our knowledge and understand. Like today with opportunity zones, I had a little bit, but even now I'm like, wow, that is actually a lot more viable than I thought it would be.
Yeah. And Jennifer, folks can go on our site and they can actually pull up our opportunity zone page. We actually have an announcement on our project. It's a 506C, which again, I'm not getting into all the legalities, but a 506C filing allows for general solicitation. It's only open to accredited investors, but you can go on to our site, to the Opportunity Zone page, pull up the announcement on the project, and we have a ton of resources from HUD, Housing and Urban Development, to key articles on opportunity zones. We have some great presentations. So yeah, there's good information there to learn more. But I always tell folks, talk to your tax professional, talk to your broker, talk to your financial advisor. One last thing, and I know you want to wrap it up. I just wanted to say too that for the military veterans and folks that are transitioning out there, I went through it. I started my business, for JID when I was about 4 years out from retirement. And that was probably one of the best things I could have ever done, thanks to the Lord up above. It was great to start the business before I got out. I took a lot of bumps and bruises, and I still am, but I was able to do that, but still had a full-time job. And for folks that are transitioning from the military, I think the numbers have to be in the 70s or 80s, that a lot of those folks eventually become entrepreneurs and business owners. So, take a look at that, get to those courses that are offered from the military to take advantage. But if you're interested in real estate or you're interested in becoming a business owner, I would start thinking about that as you get maybe 3 to 4 years out from whatever it is, whether you're going to terminate and get out or retire or whatever you're doing. And again, I'd be happy to talk to folks on my path and how I did it. Put smart people around you. You don't have to be the smartest person in the room, but just have smart people around you, and you're going to be very successful. Yeah, I don't care if it's Donald Trump or Warren Buffett. They have a lot of smart people around them, and I guarantee you that.
Yeah, no, they did. And don't be afraid to ask questions. And there's no stupid questions, because we're talking about your life, your money. You've worked so hard for it. And so you're allowed to ask what's going to happen with it.
Exactly.
Yeah. And if you get pushback on that, that's not the right person for you. You want
Agreed. 100%. You're right. And if you don't ask those questions, to ask of those people that have been doing it for a while, I ask those questions all the time. You're going to learn something. You're going to learn about the mistakes people made, and people are happy to share that because they don't want anybody to go through those mistakes. They want people to learn from it and persevere through it.
Yeah. Yeah. Because it's a mindset of abundance. There's more than enough properties and things that everybody can coexist and do wonderful things through real estate investing. So
Absolutely.
this is it, John. We're gonna have to go. But this has
been a
great conversation.
I'd love to come back anytime. And thank you so much to you and Tammy for having me. You guys are wonderful, and I hope that your listeners enjoyed this. And thanks again for the opportunity. This was awesome.
Yeah, no, we loved having you. Okay, Tammy, it's time for you to take us away.
All right. Thank you again, John. Your advice was really, really valuable to all of our guests. We'll have all of your information and your links in our show notes so that people can find you, get a hold of you. And thank you again, Jennifer, for hosting today, as always. If you would like to find us, we are on social media at EntrePods. We are on all listening podcast platforms at EntrePods. And also, if you think you would be a great guest, or you have someone that you would like to be on the show, please just visit our website, entrepods.com, and we do have a page there to fill out your information, and I will get right back to you. So thank you again for listening. I hope you enjoyed the show again, and we'll see you next time. Thanks again. Bye-bye.
Thank you for listening, and please go give us a 5-star rating on your preferred listening platform if you enjoyed the show. This helps us reach more listeners like you and keep booking amazing guests. If you'd like to join our growing EntrePods community, want our social media links to like or share, or inquire about one-on-one strategy calls with our host Jennifer, please visit EntrePods.com. See you next time, and here's to you and your best life imaginable.